big story that's really trending on Twitter as well, and we're going to address all the queries, is the changes that have been made in the banking sector. Banks' exposure to business groups will be capped at 25% of the net worth and a whole host of others. Lata, this is a big positive, but it's something that the street is well aware of.
You know, these are sanitation changes. You know, when you change the entire plumbing and architecture of a building, that's what's been done. It is extremely well telescoped because this was announced in 2015, public comments were taken, and in 2016 we were told in 2019 they will become effective. Now, what are these changes? That is, any bank will take an exposure to any business group for a maximum of 25% of its capital. So the whole thing started because in 13, 14, we had seen huge amount of debt exposure to a large number of infrastructure projects and to specific groups, the 10 top groups. If you remember, Credit Suisse had this house of debt where they enlisted 10 groups and they said banking exposure is very serious. So, you know, if one group doesn't do well, the banking system gets affected. That is when these rules were thought through and put in. And to an individual company, a bank can expose itself only up to the extent of 10% of, 20% of its own capital. Now, if those groups require more, like this will usually happen, you know, for groups like A.V. Birla, Tata's, Reliance, Adani, the really large groups. Now, if they want more loans, they will have to go to the capital market. That is the rule. So the banking system's exposure to these groups is limited to 25%. For the remaining, there'll be bonds, and of course, you'll buy the bonds as well, but the direct loan exposure is only up to 25%. Since the banks have gotten notice over the last 2 years, most of them have already brought down their exposure to these various groups to 25%. If you're still in breach of the law, then there is a minor punishment, which I can't remember, I think 0.02% or something like that. You know, your interest rate will increase by that much. So there's a bit of a disincentive to give these people more loans. The other rule that also kicks in today is that companies have to, you know, companies in India have something called a cash credit system. It's unique to India. In no other country you have this system. That is, you go to a bank as a company, say your Titan or your Asian Paints, and you have a cash credit of say 100 crores or 10 crores. You keep on, you know, you borrow it for whatever, salaries, for raw material, and you keep paying it back. So you have a credit limit. Now, what happens is the cash management of the companies is forced on the banks. So what the Reserve Bank ordered is, again, with a 2-year or a 1-year, you know, advance notice, that 40% of that will be treated as a working capital loan, and you will pay it back on one specific day. It could be 1 month, it could be half a month, it could be a week, but it should be a minimum at least a week, so that the banks are able to better plan their asset liability mismatches or their liquidity flows. Otherwise, they are at the mercy of the companies. Today, the rule starts. 40% of all the cash credit limits of all companies will be treated as a working capital loan with an end date when it will have to be repaid. The remaining will be again in a rolling system. In course of time, there is a timetable to take it up to 60 and even more. So that also kicks in. This means a major cash management discipline. It's a headache for the CFOs of all corporates in India, but it is less headache for the banks, because they have to manage their cash flows well. So two major things come into being. Yeah. You're getting a major push for the bond market. Large groups can borrow only 25% exposure to the banks. The rest, they will have to go to the bond market. And their working capital, they have to manage better. So it's really putting India Inc. on notice. But to be fair, they were put on notice 2 years ago.
Okay. All right.